Hello everybody. So in this Patreon requested video, I want to cover Rubrik. And the question is Rubrik a cheap cybersecurity stock? How does it compare with other stocks in the sector? Do I find it attractive? What do they do? So let's get started. So what we're going to do is that we are, I don't always do this, but we're actually going to start with the financials now, because cybersecurity can be very technical. Now, what Rubrik does is they do cyber resilience. So they do things like data recovery, like identity theft, making sure there is no deception in identification within companies. That's kind of what they deal with. Data resilience, which is when there's been an attack, how do you deal with it? How do you get your systems back and running? So slightly different from a CrowdStrike. For example, CrowdStrike is a network of people running the Falcon software, and whenever one gets compromised, the issue gets broadcast to the entire network and all computers update. That's a cloud-based firewall. I'm simplifying, but this is essentially what CrowdStrike is. Anyways, that's not the point. The point is cybersecurity stocks, like any other stock in software, they've crashed. These stocks have crashed. They're all down 40 to 30%. Bigger companies, maybe only 20%. Some companies, like ServiceNow, for example, is down 50%. And they've crashed. Why? Because, the narrative is vibe coding is going to kill their business. Like companies are going to stop using SaaS software and they're just going to vibe code solutions. It's not taking into account that a lot of the decision makers in companies are not that connected to what is happening. A lot of decision makers do not want to take the risk to have a vibe code solution to a problem just yet. Maybe small companies do it, but for bigger companies, there's a whole process about becoming a vendor, about having a relationship. So, my thesis is that in general, the sell-off in software and the sell-off in cybersecurity is way, way, way overdone. Now, I wanted to look at valuations. I've updated them in the spreadsheet. So this is Rubrik's latest valuation. So you can see it is, per my spreadsheet, it is nearly 4 times cheaper than CrowdStrike. And CrowdStrike is, of course, the darling of cybersecurity. Different focus, different business. SentinelOne is also more of a competitor to CrowdStrike. SentinelOne 0.21, SentinelOne also cheap. Palo Alto Network, I find, I guess it's a little cheaper than CrowdStrike, but I find it a little more expensive. CrowdStrike is the more expensive there. Now, as you know on this channel, my threshold is really 30% growth. I tend to not be interested in companies that don't grow more than 30%. So as far as I'm concerned, only Rubrik fits here. Only Rubrik is growing at more than 30%. Now, they have a low price, right? EV over GP over RG is 0.29, so I consider this low. But the Rule of 40 is not there. That's because they are not yet optimized for free cash flow. They are not yet optimized for EBITDA. We'll have to see when that happens. I think it's going to happen probably for them it will be Q1 2027 or Q2 2027, because they have a forward year. They reported a few months ago that was their Q3 26, and they're going to report their Q4 26 in March. All right. Continuing with the numbers, let's look at the number. The growth has been stellar since they went public. Since they went public, growth has accelerated, and it's been sitting between 45 and 50%, for 4 quarters in a row. It was growing a little less before that, but the growth is well above 30%. So that's a check for me. The dilution since going public. Of course, the company goes public, and we go from nothing to the new share. So the dilution in my chart looks really, really bad for the first few years. But actually, the dilution the past 2 quarters, I suppose, the past 2 quarters, the dilution has been reasonable. It seems like the run rate of dilution going forward is going to be 7 to 10%, which is perfectly fine and reasonable for a company growing this quickly, for a company this young. And of course, I want to talk about quarterly EBITDA now. Knowing that they use an adjusted free cash flow metric in their PDF, in their investor presentation. So based on the metric they use, they're showing a metric where they are indeed profitable from a free cash flow standpoint. Now, using the adjusted EBITDA quarterly here, it adjusts, right, for shares outstanding. It adjusts for issuance of new shares. So it's still showing minus 370 million loss in EBITDA in Q3. But you can see it's been greatly reduced, minus 850 million, minus 600 million, minus 370 million. And keep in mind, of course, some of this is a non-cash expense. So still a loss technically in Q3. Likely, we're still going to have a loss in Q4, maybe minus 200, maybe minus 150. And the break even in adjusted EBITDA could probably be in Q1, and if it's in Q1 at some point, it seems likely to me that it would be in Q1, so to be reported, in June or something like that. And I think oftentimes that's when these businesses get inflection points where the market starts noticing, oh well, okay, now they have adjusted EBITDA. Once adjusted EBITDA is profitable, then we're probably just a few quarters away until earnings are profitable, which is really when the market gets to notice. So I like to look at these stocks before they are profitable, because you can catch that inflection point. The fact that they have 1.6 billion of cash tells me there is not too much of a risk, because they are losing 370. They're going to lose maybe minus 200 next quarter. But of course, it would be better if they were EBITDA profitable right now, but they're not, and you're getting a steep discount, right? It's minus 41%. So, willing to let that go. Okay to let that go. The company has 1.6 billion of cash, like I said, to cover the losses. The company is founder-led, and the CEO owns 6% of the company. So something to be happy about. I know a lot of people like insider ownership and founder-led businesses. I do agree with insider ownership. Founder-led, I don't always care as much, but it's better, I suppose. Moving on. So the stock is down 40%, which is cheap, right? It's a cheap stock. It's the fastest growing stock in the cybersecurity sector. I'm showing plus 36% next 12 month revenue growth. It's adjusted EBITDA positive in 2026, most likely with enough cash to cover that, and it's much cheaper than Crowdstrike and over peers. So without looking at what they do, this stock looks cheap. It looks interesting. I like it. Of course, the problem when you analyze all of these stocks is that there's tons of stocks that are so cheap right now. Growth is so cheap across the board right now, right? So if I have to be in cybersecurity, I prefer this stock over these 4 stocks. That's point number 1. Now, point number 2, let's go to a qualitative analysis, and let's look at what they do. So they secure and accelerate the world's AI transformation. Of course, you're trying to get that AI premium in the stock price, and so they've moved to AI and protecting AI. I'll get to that at the end of the video. But first of all, let's talk about the beginning of the video. If you wait a second, let me show you that. So, cyber attacks are inevitable. It's prevention and detection are not enough. It's also resilience. So recovery. They focus on recovery when the business is attacked, and this is how they place themselves in the recovery portfolio. So you can see they have identity resilience, identity recovery, threat containment. And that's kind of sound like a Zscaler too, right here, threat containment. But they do that too. Orchestrated recovery, cyber recovery simulation. And then they also focus on data protection in the cloud, making sure your data is not stolen. Data not stolen by employees, or data not stolen by AI agents. So it's cybersecurity resilience. So resilience is there's been a breach, there's been an attack, there's been identity theft, credential theft. How do you recover from it? How do you recover from it when anything in the cyber integrations, if Palo Alto, CrowdStrike fails, if there's a failure on the cloud level, how do you recover from this failure? That's what this company focuses on in cyber security. Cyber resilience. They have a platform. They have multiple offering. They are, they've been dubbed Partner of the Year for both Microsoft and Google. So they are sold heavily via the hyperscalers. They have a net promoter score of 80. So that means that 80% recommend the product to others. 80% of users recommend the product. So that's pretty impressive right there. you can see, so this is specifically the comprehensive resilience products that they offer. So let me put that forward. So rapid cyber recovery times, that's one of their selling points. Protecting mission critical data, turbo threat hunting, so they have hunting marathon to find the threats within the thing. Google Threat Intelligence, right, for proactive threat detection. And then DSPM to classify sensitive data. Code to cloud, cyber resilience. So that's what they focus on. Identity, I told you about that. I didn't know that, actually. That's pretty interesting. Of course, we know a lot of attacks come from the inside, but attackers oftentimes don't break in, and that's probably because they can't find breaches in the code anymore, especially as you have better code, better coding language like Rust, that sort of stuff. So attackers often don't break in. They log in. They don't break in. They log in. And so from what I understand, this is an identity tracker. When someone logged in, you can see if they've, went into the company network, if they've, consulted documents they shouldn't have consulted, if they've been into files they shouldn't have been, and you can have the policy violations. So if you have an attacker on the inside, how do you know that you have a mole on the inside? How do you know that your employee is actually engaging in espionage or engaging in hacking? Well, you can track your employee via this identity tracking software. So identity resilience delivers, and it's all about, posture and hygiene monitoring for human and non-human entities. Anyways, monitoring, alert to malicious changes to identity profiles and providers. So anyways, pretty interesting. And of course, they are doing a big push because, they protect human identities, but they are now doing a big push into agents. So they want to expand the platforms on agents. So because we know the enterprise is moving towards humans and agents working together, right? Humans telling agents to go do a task for us. So they are expanding the Rubrik Security Cloud to the Rubrik Agent Cloud, where we can monitor and have guardrails and policy enforcements on AI agents. Visibility agent inventory. That's also true. Like you could have too many agents. So they are copy pasting their platform essentially to manage agents in the enterprise and how agents work in the enterprise. And of course, agents, going forward, to quote the CEO of NVIDIA, going forward, most actors who join corporations going forward are likely going to be AI agents. Not necessarily biological employees, but AI agents are going to join the workforce like crazy, and they are on the forefront of this. Anyways, moving on to some of the numbers of the investor presentation. So of course, most of that. So I'm taking revenue. This is trailing 12 months. So actually, if I were to take the ARR revenue in my spreadsheet, it would look even cheaper. But I didn't use the ARR for consistency. I used TTM. But I could use ARR for Rubrik. And if you look at the ARR of Rubrik, it's actually much higher as of Q3. It's 1.35 billion. So it's much higher as of Q3. That's an important note. All of the revenue is recurring like any SaaS company. There's no change in year-over-year growth. So you can see, law of large numbers was 39% a year ago, 34% this year, and they're predicted to grow at 36% next 12 months. So maybe some of the growth is reaccelerating with the agent deployment. Note also, gross margin is super high. I'm using a slightly lower because I'm using the GAAP numbers here. But gross margin, I shouldn't have. I should have used their gross margin. So it's even cheaper if I use this gross margin, by the way. I should have used this gross margin. I don't know why I used GAAP. I don't like GAAP. Anyways, 120% base retention rate, dollar-based retention rate. So that means existing customers spend 20% more on the platform year after year, and they are gaining new customers. So this company is growing on all cylinders. It's growing fast, and the earnings are coming up. And the key question is, are they going to report a slowdown due to AI and vibe coding? Which is exactly the narrative that's going in right now. Like everybody has this narrative. Frankly, to me, it's a very easy narrative. But the narrative is, SaaS stocks, SaaS sales are going to be impacted because you can vibe code a product, you can vibe code a service. and you can see, for example, the whole sector dumped a few days ago because Cloud Security released this version of the software, Cloud Code Security, which you can use Claude to review your software for security and flag issues and go for human review and human patches with issue. So essentially, Claude is getting into into cybersecurity. Claude is getting into cybersecurity. So, are all AI is going to move into cybersecurity? And if they do, what do these AI disrupt? And I think, as far as this company goes, so I went back into everything they do, right? And I think, as of this company goes, the AI is only going to disrupt this box right here, so 1/4. So the AI could disrupt probably threat hunting, maybe anomaly detection, maybe something like that. Data security, threat analytics. I think the AI could disrupt that. But just because the AI can do it doesn't mean they will actually do it. Because, for example, that was a limited research preview that Claude released. And we've seen these narratives in the market drop very high quality stocks all the time. For example, last year Google dropped a lot on the LLMs will kill search narrative, and Google can't compete with OpenAI and ChatGPT because the LLM will kill search. And what we see today is that hasn't happened whatsoever. So now people are saying vibe coding will kill software. Well, what are we seeing? That hasn't happened whatsoever. Eventually it may, but for now it has not. And this is likely because enterprise contracting is very different from small business and how small businesses work. Enterprises have long-term deals, long-term contracts that have been negotiated for a long time. They are risk averse, right? They don't want to take the risk of creating a product in-house and having security breaches of all sorts. They tend to be risk-averse, and they need to have a compliant solution that is registered as a vendor within the company. The managers oftentimes don't want to take risks. They're higher up in the org. And so that's kind of why I believe this narrative is mostly exaggerated. There is, of course, an ounce of truth to it, like all narratives, but in my view, it's grossly exaggerated because, the stock's down 41%. ServiceNow is down. I briefly covered it the other day. ServiceNow is down 50%. Like, that's crazy. I mean, yeah, AI could disrupt a little bit of the business, but I don't think it's going to disrupt the business overnight. And so if you have to be in the cybersecurity space, I think you will find this stock to be interesting, as I certainly did find it to be interesting. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.